Hello everyone. Thanks for joining me. And so, in this session today, I'm going to talk about a very important topic, uh, which which is trading statistics. Okay, so you know what trading statistics is? Statistics is basically numbers, right? And trading statistics is statistics which is related to your trading. And so there are a lot of. Am I first? Let me quickly check. Am I audible, guys? Mm, Am I audible, people? Okay, great, Sandeep. Thanks. All right. Right. So today's session is going to be about trading statistics, and I just really want you all to pay attention to what I'm going to say today because as trader who's new, generally we don't try to think much about it. But if you want to move towards a more systematic kind of an approach, wherein the trade tomorrow or the next two trade is just one trade out of 100 trade, and that you don't, the next two trades, you don't want you to hurt yourself. Yes, Anup, I'm recording this. Thanks. So then this the understanding about trading statistics becomes really important. Okay, so now there are a lot of trading statistics, but the prime three is: number one is your batting, is your risk. Okay, risk. Number two is your reward, and number three is your
Prakash, are you going to share the screen?
oh shit, sorry. Yeah, thank you. Okay, now it's visible, I think. All right, so the three most important trading statistics which I'm going to talk. There are a lot of other statistics. Okay, so let's not. We will not. We will probably discuss this some other day, like very fancy ones. But the three most basic ones are: one is risk, one is a reward, and the other one is batting average. Batting average or strike rate, you can call it, which is basically how many trades have been successful uh, out of the total trades you've taken, right? Now, so ये risk माने आपको पता चल गया. What is the stop loss? The stop loss, whichever whatever percentage in terms of, let's say, stop loss in terms of percentage. This could be percentage or this could be absolute value as well. Let's say if you have a 10 lakh account, um, let's simplify. Let's say simplify it to 1 lakh account, right? So 1 lakh account ka 1% of the risk of the portfolio would be 1000 rupees, right? So this could be your risk. Now then the reward will be like at whatever uh, at whatever point you take the profit out of the trade, right? So for example, if your trade is working, and now this reward is generally measured as a multiple of the risk. Okay, so let's say it can be 2 hour or it can be 3 hour. So in that case, here it would be like either 2000 or 3000. Okay, so this is the basic, these two. Now that there is a third one, which is the batting average. Now this is basically if you take 10 trades, let's say 1 2 3 4 5 6 7 8 9 and 10, out of out of this, how many did actually work and how many did fail, right? So let's say if five were hits, five were successful trades, then your batting average would be 50%. If 3 out of 10 work, then it would be 30%. If 8 work, then it would be 80%, right? So something like that. So now depending upon this three very important metrics, which is your trading statistics, you will have different scenarios of profit and loss in your account. Now you can imagine there are three kind of traders: day traders and swing traders, and then the another one is long-term investors, right? So now you can imagine that the matrix would be this metrics, not matrix, metrics. The metrics or the statistics would look really very different for a day trader versus a swing trader versus a long-term trader, right? So let's say for a day trader, the risk to reward ratio, which means doesn't matter if he takes 1% risk, this could be again different. Like for example, for me, I take in any trade I want to take at least 1% of risk or less than that, so that if I make 2x, then the portfolio will be up by 2%, right? So if my risk itself is 0.1, and even if I make 5x, that would just move my portfolio 0.5%. So generally 1% around that is what my risk is, what I try to take in bullish conditions. In bearish conditions, this risk goes even down. So but for a day trader, this risk itself would be low, and the risk reward scenario, what he is looking for, meaning that, okay, let's say in this case, if the account size is 1 lakh, if let's say he is trying to make a, if he has a risk of 0.5%, which is 500 rupees, if he makes 2x of this, which means 1%, which means 1000 rupees, this would be really good for him, you know, because because he will have, on a single day he can have more trades, number of trades, and if he takes 2 hour, the risk reward is what he gets. Even if he has 50, for him to become successful or profitable, he has to just make batting average above 33%, right? Swing traders a little bit different. Swing traders generally go for 2 hour is okay, but 3 hour is what O'Neill also suggested, you know, because O'Neill was also a sort of a swing kind of positional trader. And with 3 hour, if you have 33%, that is really good. I mean, not really good, but it's a lot better. Whereas a long-term trader, let's say a long-term trader has 20 positions, and out of 20 position, almost 18 positions or 15 positions out of 20 are not so great. But the 5 positions which are working, he will have a risk to reward ratio of at least 10 hour or so, you know. So these are the different trading statistics. Okay, now to just give you an example, I have I have a sheet, Monte Carlo analysis sheet, wherein it can give you it can simulate how much money you will make using this kind of statistics, right? So I will give you some live examples of at least what I trade. So let's say your this is the beginning portfolio. This is where you start, right? So your beginning portfolio is about 1 lakh. Your let's say win probability is 50%. So naturally your loss probability will be also 50%. Okay. Uh, Now, uh, so if you risk average lost amount, that is, if 1% of your portfolio would be 1000 rupees, and if you target 2 times the risk, uh, then your average win amount, at least what you are targeting, is 2000 rupees. Commission, let's say 20 rupees or maybe 30. No? So now if you simulate this, if you simulate 500 times, now why we are simulating this is because, see, uh, the so you will have at win and loss, right? So but you don't know how many win loss streaks you will be having. So your end goal will differ depending upon how many wins you had. So for example, if trade 1 you had a loss, right? And then just a minute. Okay, so average amount of win amount is 2000. Average loss amount of is 1000. Somehow this is not working. Just a minute. Let's change this to 30 and see. Okay, it's working. Um, so, okay, so here what's so this is the first trade, and according to the simulation it has simulated that it's a win. After that your portfolio becomes to 1,02,000, right? Then you have a loss, then you have another loss. That's in 2000. Why is it always increasing? uh, okay, right. um, there was some mistake in the sheet. So now I think it's getting better because I have put some numbers here. That's why it was not giving me the right one. So let's say doing this again. Let's say the win batting average is 50%. Means out of 10 trades, out of 2 trades you get one trade right. You win 2,000 rupees if you win, and if your stop loss is hit, that's 1%. And you can see how your portfolio changes. So if you begin by using 1 lakh account, it becomes 2 lakhs, 4 lakhs, blah blah blah, and then at the end of, let's say, 50 to 100 trades, this is the 100 trade, your portfolio is now 1 lakh 34,000, right? So that means, if let's say that if this 100 trades were taken in a year, using this statistics, if you are actually able to hit this statistics, meaning that you are, for each winning trade, you are making twice 2 R of your risk, and the risk is 1% of your portfolio, and you are hitting 5 trades out of 10 correctly, then in 100 trades you will have a CAGR of 34% or so. In another way, you can also ask that, okay, to have a 100% return, how many trades you need to take? So if you go scroll, then we have doubled our portfolio in 188 trades. Okay. Let's fiddle with the numbers. Let's say, okay, I can definitely make more than 2R, right? So let's say, what's your ideal stop loss? Let's say 5% is your ideal stop loss. And if you have 10% of your account in 5%, so that means that the R amount is only, the loss amount is only 500 rupees, correct? So if you so the R amount is only 500 rupees. So if this is the, so if this is your risk 500, and then you are making, let's say, not 2x but 3x, which means 1500, right? So now if you say that, hey, I am still getting 50% of my trades right, but if I manage to have a smaller risk, and 3 times the risk is my average win amount, so now you see how the statistics will change. uh, in 100 trades you will have almost similar, right? Now let's say, let's again go back to the similar risk scenario.
Sorry, Prakash. The 100 trade will be below, na? I think the trade number 7, we are showing trade number 17. I think trade 100 will be
Yeah,
below.
sorry, yeah. So 100 number trade would be here, and now you see, right, last time it was around 34% CAGR, which means 34,000 you have made with 1 lakh. So in this case, because the R risk reward is better, in 100 trade you are making more money, right? And so it will also take less number of trades to double your account. Thanks. Similarly, if you say like, okay, I don't want to fiddle with my risk, I'll put 1% risk. I will put 1% as my risk. I am okay using this risk, and I'm also okay making twice the risk. But you are saying that, hey, my TA, I mean, what I am good at is choosing the trades which has high probability of working, right? So then let's say if you get 65% of your trades right. Oh, fuck me. Okay, so now the trade statistics will again dramatically change. So if you have after 100 trade, you have almost doubled your account, right? Uh, so, so this is what I meant by trade statistics. Now, why I'm sharing you this is because this is just the example I have taken is just 1 lakh rupees.
Hello.
Hi,
Sorry to interrupt.
hi,
People
Parul.
are Hi, sorry to interrupt. People are messaging in the group to let them in. I think you are not allowing them to join the meeting.
No, it's not. It's not correct. I have auto admission is on.
Everyone is messaging in the group, so I'm sorry.
But it's not allowing us. It took some, I was for about 10 minutes now to get in.
Oh, I don't know what's
So I
wrong.
think there's something wrong with the auto admit. You must be running some sort of a script or something, right?
Yes, yes. So, what do you think I should do? Should I stop this meeting and again restart it? Would that help?
You're not able to view the other people to be allowed, yeah?
नहीं नहीं इसे कुछ नहीं दिखा रहा है. You are also seeing the screen here, right?
Yeah. I don't know how I got in. I was also waiting with a couple of other people.
So it's not showing me that people want to enter. I thought Saturday night people are partying. So there are less people. So what I'll do is I will stop this and again start the meeting, and hopefully more people can enter. Okay.
Yeah, Prakash. Thanks.
Okay. Thank you. End call for everyone. Um, what I'm gonna do is.
इधर गए पब्लिक
I think this is working now, right? People are being able to join. Hi guys. Hi guys. Hi guys. Welcome. Okay, I will start speaking now. So, screens are shared, recordings going on. So, briefly, what I wanted to talk about today is basically statistics, your trading statistics, and at the end, I will also, I mean, knowing your trading statistics has some very deep advantages for your trading psychology. ठीक है? तो we are going to get there, but उसके पहले what I was trying to say is there are three main trading statistics. One is your risk, कि आप अगर stop loss डालते हो तो कितना डालते हो, and generally this is calculated in terms of percent risk on your portfolio. ठीक है? So generally my percent risk for each trade in my portfolio is one or less than one. ठीक है? I try to put one. And the second one is reward, कि ठीक है 1% risk करके मैं कितना बनाने जा रहा हूँ, how much I want to make by risking 1%. So I generally, the lowest is 2R, that means 2%, right? If it is more than 2R, it's really good. 3R is good. 5R, 10R is amazing. Okay. Now, for simplicity, what I am going to tell is all these numbers I'm going to discuss is keeping in mind that imagining we have a account size of 1 lakh rupees. Okay. And the last trading statistics is the batting average. So batting average money, how many times you were right. Let's say you've taken what percentage time trades were a winner. So let's say 5 out of 10, that is 50%. Okay? So 50% is basically what I aim, or on an average over 100 trades, I think at least 50% of my trades are correct. Could be high in bull run, could be low in a bear market. Now, so let's see a scenario. ठीक है? So let's say if this is your account and you are risking 1% of your total account, so 1% of this risk would be 1000 rupees. And what you're looking for is 2000 or 3000 or more than that. Now you can achieve a risk of 1000 by having different kind of stop losses. ठीक है? So in here I will discuss stop losses. So let's say if your stop loss is 10%. Guys, can you mute yourself? Anil, can you mute yourself? Yo. Okay, thank you. So if your risk is 1%, which is 1000 rupees, if you have a stop loss of 10%, then you can only load up 10% of your total portfolio, which means 10,000 rupees. 10,000 rupees is your total amount of shares you bought, and in that if you put 10% stop loss, then your SL risk would be around 1,000. But the same 1000 risk, you can load up more. So this is 10% of your portfolio. If you load up, let's say, if your stop loss is 2%, right? So 2% stop loss, you can load 50,000 worth shares, and your total risk on your portfolio would still be 1000 rupees. Okay, so you can play around with your stop loss amount so that you can load up your position sizing as well, right? Okay, so these are the numbers, and you all know these numbers by now. Now this is a sheet which can simulate depending upon if what kind of numbers you need to clock to, let's say, double your account. Okay, so let's see. Now if your risk is 1000, if your reward is 2R, which is 2000, and let's say your win probability is 50%. Okay, so in this case, in this simulation, to double your account, you need to take 140 trades. Okay, and around after 100 trades, around 61% is what 61% CAGR, 61% that's going to be your return. Now let's change it a little bit. You can say that, okay, boss, my risk to reward, I want 3x. And so, but the average loss, which means the 1% risk, I am going to change it to uh, 0.5, so which would be 500, and 3R of this would be 500 into 3, 1500. So that is your average win amount. And with the same probability batting average of 15%, you will now take less number of trades to double your account, right? No, sorry. Let me do the same thing. Let me just put the same risk and say, instead of 2R, I'm making 3R. So that is the calculation I'm trying to make here. So now you see, to double your account, you will need, previously we took a little longer, higher number of trades, but in this case, in in 122 trades itself, you are doubling your account, right? Uh, now you can 1:3. Now depending upon what is your, so this is basically 1000 in 3000 is 1:3. Now depending upon the risk size, this number will also differ. So if you see 122 trades, if you say मेरे को risk भी छोटा करना है और उसी हिसाब से reward भी छोटा करना है, right? So then you see, it will take a little, in 122 trades it's hit only 71%. So to double your account, you are getting a little more number of trades. So 159, you hit your double your account size. Now so that is why these statistics are so important, right? So for example, let's play another criteria. Let's say that, let's get back to 1% risk. Yeah, right. Let's go back to 1% risk, and let's go back to double, twice the risk. And now you say, uh, bro, that my hit probability is actually better than 50%. So you say that, okay, I am at 7 out of 10 times my trade decisions are actually correct. So in that case, you see, you don't take much trades to double your portfolio. So in this case, you hit 2 lakhs in 81 trades, right? So now you can imagine, for a day trader, or so this kind of characteristics or this kind of statistics would probably a day trader will have, right? So his risk would also be smaller than this. Reward would also be not more than 2x, sometimes 1.5x. But let's say there is a long-term guy who is only right 30% of the time, but when he is right, he is making 10 times the money he is risking. So in that case, it would be 10,000. So in this case, you see, he will actually not, he will take the least amount of trades to double the money. Okay? But now you have to understand, because he is a long-term trader, as compared to a swing trader, he will, so let's say I am a swing trader. In a month, I will, let's say, take 10 trades. Huh? And so in a year, I can easily take 120 trades, right? But the question you have to ask is, would a long-term investor take 120 trades in a year? Just a minute. Okay, I'm back. So that's the question you need to ask. So, uh, so these are the give and take you have to make when you are trading, right? So now, how will this affect your trading? Okay, very simple question. Like, how will this affect your trading, or how is knowing this going to help you? So, for example, if my uh, if my aim from market is to have a CAGR of 50%, so then from whatever my statistics right now, see, my trades I can easily make 2R, 3R. You know, 3R is something which is very not very easy. I wouldn't say easy, but on an average I can definitely make 3R. Okay, and I can risk 1% of my portfolio, let's say, which is 1,000 here, and then let's say from already knowing my hit rate, even in a bearish market, I can easily say that 50% is my win probability, right? So now, if my goal from the market is to make a CAGR of 50%, so I will have to see that how many trades I will need. So that number is around 40, 43, 45. Okay, so now that gives me such a nice feeling, saying that, okay, if I am so sure that my win probability is 50%, and I'm so sure that when I can definitely make 3 times the risk, then it will just take me 43 trades to do this. Okay, let's say 1% risk is too much for you or for me, and in that case, just say that, okay, maybe I will not have so much of risk. I will have less risk, but 3 times risk reward ratio is the same. So in that case, you will have a little longer, in let's say 105 trades. Now you, as a swing trader or whatever system you are following, then you make a back of the envelope calculation. How many trades do you take in a week? So if in a week you take 3 trades, then in a year you will take 52 into 3, right? So 52 week trading weeks into 3, and so this number is well within what you can actually make. So knowing the trading statistics, and then you know, what is that word, like uh, and then thinking about the your trading in terms of all these numbers, average numbers, that gives you more confidence that, hey, this one trade, this next trade, which has 1% of your portfolio in it as a risk, will actually not matter if these are actually your numbers. Now that's the problem, right? Because are these actually your numbers? So for that you will have to record all your trades. For that you will have to go back and see, hey, last 6 months how many trades I took, what was the average win amount, what was the average loss amount, did I wait for the stop loss to hit, did I fiddle fuck with my stop loss? So all of these things will actually come back and show in your statistics, and will actually hamper your P&L at the end of the day, right? So now why I wanted to say this is because, see, for now, let's say if your trade size is actually 1 lakh, so putting 1% of 1 lakh, 1,000 is not a big deal, right? But if your total size is more than 1 lakh, right? So 25 lakhs, 1 crore, 10 crore, then 1% of that amount would actually mess up your mind, in the sense, oh, like, you know, 10% portfolio dala, 10% stop loss dala, that is 1%. And if your portfolio is 1 crore, then that would be like, I think, 1 lakh. So stop loss hit ho gaya, to then you will lose 1 lakh. But if you know the overall statistics, it doesn't matter your account is 1 lakh or 10 lakh or 1 crore or 10 crore. If you can actually really do this statistics, these numbers at the end of the day will not lie. Okay, so that's where I wanted to take you guys, that first of all, trading statistics are important. It's important, it will tell, so different time periods, traders will have different kind of statistics, and then you should also uh, move, or the kind of trading you do should also use this in mind. Like, for example, let's say if you are someone whose strength uh, is that whichever trade you took, it becomes profitable, मतलब ठीक है, मतलब but so in that case, what you have to do is you go for high probability here. Let's say 80 out of 8 out of 10 trade become possible, become a winner. But what you do is you don't wait for 3 hour. You can go for 1.5 hour, you know, and in that case also you will make a lot of money. So let's say you still have a 1% as risk, and instead of going 2x, you say, because I know that my trades as soon as I get in do move in positive direction, then you don't wait for 4 hour or 5 hour, don't wait for that to become multi-bagger. You just say that, okay, I will take this trade, I will get 1.5 hour profit, and then I will move on to your next trade. So if this is your statistics, you just quickly see how many trades do you actually need to double your account. You need only 99 trades, right? So that is what I'm trying to tell you in this session today. So now I will stop here, open it up for questions, and we'll take it from there. Okay, anyone has questions?
Prakash, Sandeep here.
Hi, Sandeep. Hmm.
My capital is 1 lakh rupees,
Right.
and I'm ready to lose 750 rupees on per trade.
Right.
How can you identify the quantity for this?
Yeah. So that's let's say give me a trade which you have taken or which you are eyeing to take. We'll calculate this.
I think the one which I taken right now was Premier Qualification.
ठीक है. So Premier Poly is what you've taken, right? Okay, so let's say if you have a 1.1 lakh account, so let's say you are taking a trade at 96 rupees, huh?
Yes.
ठीक है.
I took at 95.
95, okay, fine. So 95 लगाते हैं. So if 95 is your this one, to lose 750 rupees, you just have to say uh, so let's say, what's your stop loss if you have
I just marked that 88.
88, okay, ठीक है. So 88, right? So that means in one stock, if you had one stock taken, then if stop loss hits, you are going to lose 7.25 rupees. ठीक है. So if your risk is max risk is 750, so 750 you divide by your risk per one trade, which is 7.25, divide by 7.25. So you can at max take 103 quantities of this, okay? So if you take 103 quantities and if you put this stop loss, if this trade works against you, you will lose 750 rupees, okay? And so if let's say this is, okay, let's put some realistic number here. So 50%, and let's say so that's your risk is 750 rupees, 750. And let's say you can make a 2 hour of 750, so 1.5, right? So this, if this is your statistics, then after 100 trades you will have a CAGR of 60%. To double your account, you will, yeah, you'll probably need a just a minute. How did I see 60% here?
275 rate, I guess.
Yeah. So these are the kind of statistics you will have. Okay. So now another thing. Okay. So now in this case, the same statistics you can also do by like this. So let's say you, instead of 7.6 stop loss, you can say that, okay, I will put this stop loss. So this is what Manas Arora does, right? So Manas Arora's stop loss would be 2%, 1%. He doesn't even see levels. He has, okay, round figure 2%. So now if round figure 2% is 3%, let's say in this case you are putting it below this, then you can now have more number of stock shares. So instead of 103 you will have into 2, right? So yeah, so like that you can also have more your portfolio size more depending upon the stop loss. Yeah,
Got it. Yeah.
right. So the point is to have a belief in the numbers you are generating, and that brings me to the question, how do you believe? You will only believe by your actual performance, right? So for that what you need to maintain a trade sheet. ठीक है. That trade sheet should not be, or doesn't have to be very elaborate कि so many. You just have to know कितना लिया, कितने पे लिया, right? So at what price did you buy, what was the risk, at what price did you sell, and then what was the risk reward scenario in that. And if you take 30 trades, 30 is a good number for for you to get an idea key what is the this one. So for example, I will take an example of Electra. This is my trade, okay? So in here what happened, I started building positions, I think from somewhere here, 670 something, and then somewhere here I again topped it up. So in here I had 25% of my portfolio. Okay, so 25% of my portfolio, uh, uh, a small risk. So 25% of my portfolio around here. So it was little large. I again topped it up here, and now the risk reward scenario which I got in this trade is 685. Yeah, so 685 was my buy price, and I think 4% was the stop loss somewhere here. And so the risk reward in this trade is 4 times, right? And 4 times तो मेरे को चाहिए भी नहीं. If I can make consistently 3x of my risk, then I will be really happy. So in this, so my this trade is already 6x, or yeah, somewhere around actually 4x, right? So here what I have already done is I have sold 50%, and then this 50% I can, it doesn't have to be just 2 hour or 3 hour. This 50% this 4 hour can actually now go on become 6 hour, 10 hour, or whatever, right? So the only thing is I need to do this consistently, right? uh, so why I wanted to talk to you about this is the same thing here. The 1% risk of 1 lakh is 1000. That doesn't matter. But if your account size is 25 lakhs or 1 crore, 1% of that would matter to you. But it shouldn't. That's my point. It shouldn't. Why it shouldn't? Because statistics probabilities will not lie. If this is indeed your statistics, which means you are correct 50% of the time, you can have 2 hour of your this one with 1% of risk, and you can make 2 hour. In 100 trades you will make good money, right? So irrespective of account size, of course account size, once you get bigger and bigger, the psychology becomes tougher and tougher, but it shouldn't. Again, I have a very small account, so maybe I am naive, but I think when my account size is bigger, I still want to follow the blueprint here, what I'm trying to get at. Okay, any more questions?
Prakash, are you going to share this Excel?
Yes, I'm sharing
Please
that.
do share. I just want to write all my trades in that. Let me check.
Sure, please.
Thanks.
Okay, if we don't have any more
When
questions.
we have the recording of this, I used it for the first half an hour.
Yes, Venkat, I will send the recordings. All right, guys. We'll stop here. No, we don't have session. So this is the weekly session. Actually, I have a late night football match today. So so I cannot wake up tomorrow in time. So it's a champ. I'm supporting Milan today because I'm Manchester United fan, so I wouldn't want City to do a treble. But I think they will win it. I had a worse day. I am having actually a very bad day because I have food poisoning. I ate some stuff yesterday, and the whole day I was in bed. But let's see how the day ends.
Okay, all the best.
Thanks, man.
Hey, get well soon, Prakash.
Thanks,
We
Sandeep.
need you.
Yes, I'll be there. I'll be there. Okay, guys. Yeah, just ponder about what I mean. Know your statistics is what I'm trying to say. Okay, it's so important. It's so important. Like, uh, okay. See you then. Bye.
Bye, Prakash. Thank you.